Hi there guys, welcome back to a new video. Today's video is going to be breaking down a gold strategy that you can use. As you can see on the screen, since last Thursday, this strategy, if you'd have taken every single trade, would have returned 15.2R. So 3 trading days, 15.2R, multiple wins, only 3 losses. And in this video, I'm just going to quickly show you exactly how you can do the same. So the main rules of this strategy are you basically want to find areas that have historically, and if we do just, what I'm going to do is just draw out the market, something like this. What you want to be doing is finding areas where price has historically been support and resistance, like so, and has worked 100% of the time with at least 2 touches on the most recent, like something like this and this. So here we've had support, break, retest, resistance, and here this level has now not been touched, meaning the last 2 times this area was touched, it has worked 100% of the time when it comes to a bounce reaction. Exactly like the same here, you've had a recent area, support, resistance, and you are basically wanting to find these areas of recent reactions. It could also look something like this. So you've had a bounce, and then come up here. You've then also got something like that, where you've had a recent play, and then prices come in the same. Some areas are going to have worked 3, 4, 5 times. Some, it's just going to be the 2. But using this mindset of these strategies is exactly how you can potentially replicate this. I would always advise getting your own data following these videos, just so you can obviously tweak any rules, figure out your timings. But what I will do, I'm going to go into the bar replay, show you the historic trades, show you the reason for entry, and then following that, hopefully, you can obviously apply this yourself and profit from this video. So basically, if we look at the first area, we had support, resistance, and now we've broken this area. And I'd go a little bit higher just due to this close. All you basically need to do is assess. If you're looking to buy, you want to be looking at the most recent support and see how much drawdown from your line price did. Your stop loss wants to cover the lowest point of the support or the highest point of resistance if you are selling. Okay, this is a limit order strategy. It is on the 15-minute time frame and it is on gold, and obviously gold loves structure, which we've said countless times on this channel. So you can see here price pushes down. Obviously your stop loss covers the support, so you're good. If you wanted to give it a little bit more room due to spreads and stuff like that, by all means you can, but this is the main reason why we're looking at this. You can see this trade here, obviously then triggered in and then went all the way up to where we was targeting. Now, why would we be targeting this area? If you look here, you've had support, resistance. So this area has worked 1, 2, 3 times, and then anytime it was broken, it was retested. So you can see here, this trade would have lost, but you would obviously have had your 5.8R from the initial position, which takes you up to 4.8R with the loss. Another good thing to do with this strategy is also leave runners, meaning that if price does continue to go, your initial trade can continue to profit and you can potentially roll profits into the counter trend trades. Doing that is so underrated. It's so easy to do. And I've sometimes had it, in all honesty, in the past where I've been able to risk 50% of the account when it was a smaller account because my floating profit on the counter trade covered that and more. So it's very, very good way to compound your account, especially if you are trading, obviously, with smaller position sizes. Then nothing much really happened in terms of what we was looking at. You can see stuff like this here. This is around 10 p.m. So you're not going to trade 10 p.m. spreads because obviously the market closes for an hour. So for that reason, you're not going to be trading in and around them times. If we then see what happened here, so why was this area a pending order? Well, you can see here we've had resistance, break, retest, support. So 100% of the time out of the last 2 touches, this area has worked in terms of a reaction, unless price has broken through it, which we saw there. We're not finding an area, for example, over here, and then applying it over here. So you can see here, if you look to the left of the screen, this historically would have been a perfect area to trade. You can see there you've got a news candle, big slam down. But here, this would have been a potential area to trade. If we then look what happens in the future, we had a reaction there on the retest, so that would have been good. But then here, price starts breaking through it, so it's not something we want to trade. You are only interested in the recent areas that are untested or unbroken through, so to speak. So if we see here as well below it, why was this an area? Resistance, break, retest, support, and price has not come back down to this area. So let's have a look what happens. First area would have lost. This area, you can see here, you've also got areas there. So you have resistance, break, retest, support, break, retest, resistance, break, retest, support. So 1, 2, 3, 4. Price came back into this level, and as a TP, you could target the previous level that you would have taken your first loss from. And you can see there, 3R, you've made your money back, and you're up 2R on these two positions. Then, if we look what happens, I'm going to get rid of these. Price then continues to play out, continue going. Again, when it comes to news and stuff like that, you probably want to assess that. And then this area here, why was this important? If we look to the left-hand side, you can see here, you had resistance, break, retest, support again. Here, this was obviously around 11 p.m., 10 p.m. when the market goes wild, so you can discount that as just a gap. And then price came back to it. Why was we targeting down here? We was targeting down here because if you look, you had support, break, retest, resistance, and then break. What are the chances of price retesting this as support again? Very high, or more likely than price not to do that. If you then see what happens, price then pushes down. You hit your 2.3R take profit. This trade goes into a little bit of profit, so you're probably thinking, we're onto a winner. And then as you can see, price messes around for a little bit before finally pushing down and taking you out. So same again there. You've had a 2.3R trade and then a 1R loss. That takes you to 1.3R on here. So you've got 2R there, 1.3R there, and 4.8R there. So a lot of the time, your buy or sell will run into a counter trend position. If you look as well, price continued to push down from that area. So you can see this trade would have continued with a runner to keep pushing down. But for the sake of this video, I'm just going to show you what the full TPs would have looked like. Now, why was this a potential sell? If we look at this market here, super easy. You want to count as many wicks as you can. Support, break, retest, resistance. So what are the chances of this level working? It's worked 75% of the time, minus this break. So what can we do? Set your limit, cover your stop loss above, obviously the high, and target the low because you've got nothing else to work with. As you can see, price did exactly that and continued to push down. Why was this area down here, the 2.8R, why was this an area of interest? If I just draw this, go left on your chart. Resistance, break, retest, support, support. So that's a double bottom. So you can see 1, 2, 3. This has worked 1, 2, 3 times. The fourth time it didn't is when it broke through. So 75% of the time the area has worked. Price comes back down to that area, pushes into it quite aggressively. And then there you see, price then pushes up. Now, why would this be your take profit, which was hit? If we draw another line on the chart, go left, what do we see? Support there, and then we've got resistance there. So you could even put that a little bit higher. So you've got resistance, break, retest, support. You've then got support with this big wick there. So that would have even been a position following the news. And as you can see, price comes back into the level, and this is a trade that, if I'm not mistaken, would still be open now. Yeah, and that target there is 3.6R down to this area here. So overall, you've got 18.2R in winners, minus 3R in losers, and then that makes 15.2R overall, which is good for 3 days trading. Now, as always, get your data, use this, go away, use it to your advantage, get your data around your timings, your take profits, your stop losses. Does news affect it? Which it definitely will on the 15-minute time frame. Does your 10, 11 p.m. spread changeover affect things? Yes, it will. But it's a very simple strategy that you can use and hopefully benefit from. You can see that the win rate is quite high. You can see the risk to reward is high. and there are two things that make for a good strategy. So drop any comments below if you have any questions surrounding the strategy, and obviously you want any help or any questions answered. Like I say, this is just something really good, super simple, that you can potentially use to start understanding gold, its characteristics. Long story short, gold loves structure. Break, retest, double bottoms, double tops, that's what gold is all about, and that's just the way it moves. So again, any questions, please let me know. All the links to the groups are in the description, and we will see you in the next video.